Right, for this is basically a general discussion on the objective financial accounting framework, okay, and the source of accounting standards. So we have a look at it. Okay, and also, a bit on what happened in Malaysia in terms of financial accounting and reporting. Okay, so we start with, this Surah Baqarah, verse 282. All you who believe, when you deal with each other in transactions involving future obligations in a fixed period of time, reduce them to writing that the scribe write down faithfully as between parties. Okay, I believe that this verse has been discussed in other courses as well. Okay, how important it is to put obligations into writing, and definitely that every party of the contract need to fulfill the obligations and to honor the obligations. Okay, why financial reporting in public sector is important? Okay, so I think partly we discussed on to understand is about transparency. Okay, transparent will create more accountability as well as efficiency as well. Okay, to establish an appropriate accounting system for the purpose of accounting public resources, that is the system to provide as a basis to provide financial reports. So with that, to execute the functions of custodianship and stewardship over public resources. Okay, so custodianship is basically, to look after the asset. Stewardship, make sure that they can manage the assets, and with that, they can report. So to discharge public accountability over all kinds of public resources. Right, financial reporting objectives in public sector based on conceptual framework by IPSAS 2013. All right, so we'll also discuss on the financial accounting conceptual framework as adopted by Malaysian government. That will be in the next topics, okay, most likely next week. So if you look at this, I think this is very similar to with the adoption of MFRS or IFRS. You have conceptual framework, okay, where all the qualities of financial reporting, accounting need to be provided. So you look at this to provide information about the entity that is useful to users. In this case, definitely financial accounting, financial information, for accountability purposes and for decision-making purposes. Okay, so there are two purposes. One is accountability, the other is for decision-making. So decision-making for the organizations or for the entities, as well as for government as a whole and the parliament. Okay, to discharge accountability obligations, right, with the use, how they spend the public money, then they have to report. So in what way is the best way to report? Okay, so financial reporting provide best practice framework. Provision of information about resources entrusted for service deliveries, service delivery achievement during reported period, and its capacity to continue to provide future services. Okay, so with the financial reports, of course, is basically based on the past events, reflecting what happened in the past, but with the understanding that it will also be equally good for the future. For the future services. Right, this is provided by NCGA, okay, I think it's on the US, that the objective of financial reporting in public sector, demonstrating accountability and stewardship, okay, that's one. The other is decision-making in economic, political, and social purposes. Okay, so you can see that the uniqueness of government organizations is not only about profit maximizations, it's also for political matters as well as social purpose. Evaluating managerial and organizational performance. Okay. Right, accountability and decision making, assessing the compliance of government agencies with legal and other statutory requirements regarding how resources are obtained and spent. Okay, public accountability, ensuring relevant authorities in government are making rational decisions about allocation, distribution, and utilization of resources for various sectors of the economy. So that's decision making. So rational decisions means so generally benefits must exceed costs. I think that's the threshold, the framework. So when the certain course of action is taken, So the benefits must always exceed the cost, right? So how to be able to make that kind of judgment? So financial reports definitely can provide to a certain extent the amount of financial information. Generally, I think decision making need to take into account both financial information as well as non-financial information, and to make sense in the context of decision making that need to be made, and then for the best decision to be made. Okay. Assessing the capability and capacity of government organizations to provide high quality products and services, and its ability to continue to serve the public. Okay, that's for public accountability. Right. For performance evaluation with the financial reports, serving as a useful tool to monitor performance of government organizations in terms of their efficiency and effectiveness in using public resources. Okay, that's definitely the aim of performance report. At the end, you can make that kind of assessment. So all these resources being entrusted, activities undertaken, they achieve, okay, through of course demonstrated by the relevant KPIs, and as well as with how financial reports can demonstrate those dimensions, then they can achieve efficiency and effectiveness. Providing government an opportunity to put forward statement of its achievement to influential users and public, statement of achievements. With the that's why I think the financial report, they call it for general purposes. So these are the general purposes of financial statements for the government. Right, now we move on to features of financial accounting and reporting, the characteristics, right? The basis that how financial reporting is provided or prepared for for government organizations or public sector organizations. So the first is a reporting entity. Okay, reporting entity can be as a separate funds. Okay, funds as a reporting entity. Okay, of course, I mean, this also can be made different agencies, government agencies, they provide reports. But sometimes certain government agencies or in government, there are series of funds, separate funds with separate objective, okay? Then every fund become reporting entity. So get yourself familiar of a fund as a reporting entity. I think to understand this a bit more, that a fund can be a reporting entity, because fund also can be an organization. Okay, so if you look at, I think in Malaysia, there are at least two or three major funds that become GRC, that become government-linked investment companies. So if you look at KWSP, for instance, EPF is a fund. Okay, in terms of its financial obligation, is a fund. Right, so with that fund need to be it become an agency. So for accounting purposes, it definitely is a reporting entity. Okay, then we have PF, we have Tabung Haji. Tabung Haji itself, Tabung is fund. Okay, Tabung Haji, so fund pilgrimage. And then we have for the army, okay, Lembaga Tabung Angkatan Tentera. Okay, the army board, isn't it? Okay, the army fund board, right? One of the biggest, as good as Tabung Haji, right? So it can be a reporting entity, but that is at quite at a big scale. But within government agencies themselves, okay, even our universities, okay, there are multiple funds within organizations. So by right, it can be a reporting entity, okay, because they have specific objective and specific aims to be achieved. Okay. Reporting period, fiscal year. Okay, so fiscal year as opposed to accounting period. So generally in private sector, we just refer that for accounting period, because accounting period can end in any date. Okay, but the common one is in April, in June, okay, in July, in September. It can also be in December, right? But for accounting for the government, the reporting period must be fiscal year period. Okay, so what is the year ended for fiscal year? Anyone of you can just quickly mention the fiscal year for the
31st December.
Correct. Okay, 31st December. So you don't have you don't have to find another option. Okay, for government, their reporting period ended 31st December. Okay. Basis of accounting. Yeah. So basis of accounting. So here you can see cash basis, modified cash basis, modified accrual, full accrual. Okay. So basis of accounting, what comes to your mind when you heard this basis of accounting? What is your thought process when you quickly, when someone mentioned to you, okay, what is the basis of accounting? So what comes to your mind? Anyone? You are a future accountant, or accountant in process. So yeah.
Cash received, cash
Keeping.
payment.
One by one, yes. What is basis of accounting? Okay, just now you have two things.
Bookkeeping.
Bookkeeping. Okay, what else? One more? Yes, class. Just now, brother?
Journal, ledger, those things.
Ah, okay. All right. Basis of accounting, bookkeeping. Okay, not quite right. That one is accounting books, accounting books or accounting records. Okay, but here basis of accounting. Okay, one more. Who would like to answer? Basis of accounting. Anyone? 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 Accrual basis. How to reckon? Yeah, exactly. Okay. So one, how to recognize. It's about recognition and disclosure. Huh? Okay. So cash and accrual basis. Yes, that's example. Correct. Huh? Okay. Right. I think in a way you get that understanding. But if you come to your mind is recognition. Okay, you are definitely on the right track. Right. So at what time in terms of timing as well? Okay, basis of accounting is important. In terms of timing, in terms of items of to be recorded, right? Basis of accounting have that implication. So we'll see. Okay, so in government, generally in private sector, there is no choice. Okay, the only choice they have to implement full accrual because the standard is basically based on full accrual. But for accounting in government, okay, there is a variation of practices, right? Okay, start from cash basis. It's been in practice maybe hundreds of years. Okay, and then they move on to, and then there's also another option, modified cash basis. But now the call to implement full accrual, okay, pretty much it's happening across the globe. Okay, this is equally applicable to developed countries, developing countries, and definitely Malaysia is part of it. Okay, and but sometimes if you can see, you can observe that developing countries they only adopt full accrual. Okay, why it happened? Whereas developed country itself they don't practice full accrual. Okay, one of the reason is sometimes because developing countries they receive donation from donor country. Okay, from IMF, from World Bank, from possibly like in the US or the European countries. When they provide donation, they make a requirement that the government must adopt full accrual. Okay, so that's why you can see less developed countries they practice accrual accounting. Okay. Right now, I think we should recognize this, SAP, that this is multiple, but there is reason for it because cash basis accounting. I think at this point you are well aware of the function of budget for the government organizations and how budget is being monitored by the parliament. So that's why cash basis is very popular because cash basis is closely related to budget because budget is provided cash basis. So that's why the reporting also based on cash basis. But nevertheless, cash basis has a severe limitation because of the development and others, and also because the current best practice in globally is moving towards full accrual. Okay, asset and liabilities. Okay, under cash basis, no disclosure of assets and liabilities on the balance sheet or on the statement of financial position. Okay, so that's why how important it is, the basis of accounting. Since if the government they adopt cash basis, so you don't see in the balance sheet, fixed asset. You cannot find investment property, okay, and account receivable even, okay, on the face of financial statement of financial position. In the equity, okay, and the cash basis, they use fund balance, but this one is still okay fund balance. You take note of that. And this also can be useful even under accrual accounting. Okay, financial statements, statement of receipt and expenditures. Okay, that is basically the main for the, because they don't have financial statement of financial performance as we understood. Okay, with revenue and all that. So instead of that, they have like a cash book. So we have receipt and expenditure, but in terms of financial statements. Okay, user of financial accounting reporting: taxpayers, voters, investors, donors, grantors, donors, fee-paying service recipients, okay, vendors, suppliers, legislative bodies, maybe suppliers, financial reports. Yeah, I mean, particularly at agency level. At agency level, definitely financial reports is very important. Because you're not going to provide services to a weak agencies. Okay, even if you can, we can extend a bit more. Because for some government organizations, they also can provide, obtain financing, for government-linked companies, statutory bodies. If they can get approval from the treasury, you get to get funding from the financial institutions. Okay, so financial reports is the key. Okay, particularly when to reflect. So what is their current financial position, particularly during the economic crisis, or when there is a problem. Okay, last time, during the time of when petroleum, when there's an issue of petroleum price, when they went down so low, that time, okay, the Petronas also facing, all these oil giants facing financial problems. Okay, so that time, even those who working, or even that kind of entities, they can have problems in getting funding. Okay, legislative bodies, management, oversight bodies. Legislative bodies is Parliament, isn't it? And definitely now Public Account Committee. Okay. Right. So there's an accounting technique here. They call it fund accounting. I think in this topic. Okay. So I think I just highlight the basis of accounting, right? Including fund account. I mean, cash accrual, modified cash, modified accrual. But in terms of accounting techniques, okay, one of them is fund accounting. Yeah. So I just highlight relevant understanding and concepts in fund accounting, as well as some examples, okay, and procedures, as well as okay, we'll highlight on commitment accounting. Yeah, because in government, okay, they can also introduce commitment accounting. I just discussed this, okay, taking into account the practice in the US, okay, in Malaysia, and in general, so that I think for education purposes, you should get exposed to all kind of techniques. But it's just that when it comes to practice, possibly they just choose what is most relevant to their current organizations or government. Right. So fund accounting, but definitely in case of Malaysia, fund accounting is very important. Okay, to support when the government create fund. Okay, how to make sure that the fund can achieve its objective. So if you look at Tabung Haji, for instance, how Tabung Haji can achieve the objective. So definitely accounting play an important role, right? To make sure that all fund, the income, the investment should be accounted properly, so that it can give the utmost benefits to the members. Okay, like Tabung Haji, for instance. Okay, because the big reliance of the members of the performance of Tabung Haji, okay, in terms of dividends, in terms of their investment, their money within it. I think during the time of the change of government, there was a big issue regarding Tabung Haji, and including the transfer of assets. Okay, so I think accounting jargons was jumbled in the media talking about it. So fund accounting can provide the framework to make sure that the best interests of the subscribers or members of Tabung Haji, which is basically general Malaysians, okay, around how many millions basically members of Tabung Haji, depositing their monies. So all the decisions must be made in the best interest of the members. Okay, so fund accounting recognizes each class of fund has unique characteristics and objective. Okay, so you look at the bottom left there, the box. Each fund is an accounting entity. Separate financial statements are prepared for each fund. Okay, so these are the best practice. So by right, if one organization that can have multiple funds, so each one of them is basically reporting entity. So to what extent the organizations they want to prepare? Okay, sometimes they just pull, just control at the equity side. Okay, but whereas the assets, the liabilities, the cash, okay, all being pulled together. So there is limitation with that kind of reporting. Okay, because sometimes fund the money, the assets cannot be commingled. Okay, so that's why you have to really go through the contracts, the term of reference of the fund. Okay, to make sure that all the terms of mostly I think based on trust deeds. So all the trust deed must be the clause in the trust it must be observed. So who can do that? Who can advise organizations? People like you with the financial, with the accounting background, okay, with accounting expertise can advise. So how to observe to make sure that the assets, the liabilities, and the equity side should be preserved to make sure that they will be used only for the best interest of the target groups or the objective of the fund. Okay. Each fund produces separate financial statements. Okay, obviously. Okay, but there are two types of fund. It can be unrestricted fund, which can be spent for any charitable purposes or a charity. Okay, of course, these fund accounting I take from accounting standards, based on in the UK. Okay, there are two types of fund. They call it unrestricted fund. So where the reserve, so all can be spent depending on the discussion with trustee. And another group, type of fund is restricted fund, which can only be lawfully used for specific charitable purposes or for specific purpose of the fund. Okay, it may not be charitable. Okay, for specific purpose. Right. So there's a bit elaboration. So you can see that all the items here is basically based on accounting standard, right? FRS 102. SOP. Statement of I think best practice or something, a recommended practice. Okay, unrestricted fund are spent at the discretion of trustee. Okay, it can be used to supplement expenditure made from restricted fund and to be set aside to be used for future commitment. Okay, so you can see that commitment accounting can also be useful. Okay, to help on this putting aside the commitment, the fund for the commitments, future commitments. Restricted funds can only be lawfully used for specific purposes. Okay, restricted by specific law on all the trust deeds. So you can see not only the trust deed, but also if there is a relevant law for it. And law, I think definitely if you look at a big organization like Tabung Haji and all that, okay, so there must be specific act guiding Tabung Haji. Okay, so you can have a check. EPF is that, okay, so not. I don't definitely. I think they are based on certain laws passed for the establishment of EPF as well as Tabung Haji. Okay, not just based on trust deeds, because trust deed is basically it's a legal document. Basically, they set up as simple as that. Okay, unlike the law is basically passed at the parliament. Okay, restricted fund can be categorized into two types: restricted income or endowment. All right. So restricted income funds are to be spent or applied with a reasonable period for their receipt for specific purpose of the funds. And so I think for restricted fund, of course, it must be specific, but the entire income can be utilized. Whereas endowment funds are to be held, but because endowment fund is basically to generate income, and only the income will be used to spend for the purposes. So generally, I think endowment fund, one simple example of endowment fund was the establishment of ECF, okay, based on endowment fund. You know ECF as a finance accounting students? ECF. ECF. Okay. Did you aware of that organization?
I've heard before, sir, but don't know what it is.
Oh, okay. Yeah, we can Google ECF. Yeah, it's under okay. Yeah, it's a kind of we don't take them as competitor to our kuliah, but or to the university. But many of these are Prof Manso was used to be dean of our kuliah. Okay, so ECF is basically there was a money, endowment money entrusted, endowment fund. This is even there, endowment fund here. Okay, So endowment fund of ECF. So here is basically when they were established, a government set aside 500 million, okay, to develop an entity where focusing on developing human capital for Islamic finance. Okay, so I think at that point, even our university are looking forward to be the center that the money will be parked to our university. But then Bank Negara got it for some reason. That's why I think lobby is important in government organizations. So the money was parked under Bank Negara. So Bank Negara, involved in basically developing this institution. It became ECF. The good part of it is I think they took many of our lecturers moving to ECF. So one entity become going backward, another entity going forward. That kind of issue. But what I'm not highlighting that, but what I'm highlighting is the fact that it's based on the endowment fund. So endowment fund means so this entity, okay, is running based on the income of that 500 million, right? So 500 million have to be invested. Then the income of it will fund the operation of this agency. Okay, and I think they're fully developed nowadays. You see so many awards. So recently they appoint new CEO. Our Prof. Dr. Azmi used to be our dean as well. Okay, so I think it's an example. So how that an organization, but they are very successful. See, many of our students also, once they finish our studies, they take another call it the degree or masters or PhD in ECF, because last time they have so many incentives, but I'm not sure nowadays. Okay, but my point is it's an example, the function of endowment fund. Okay, so by right 500 million should still be there. Okay, in ECF they manage. I'm not sure who will be the fund manager, either Bank Negara or the ECF itself. But then the income should be used to run ECF. Okay. Right. Reporting for the fund in maintaining the accounting records, entities must separately identify each restricted fund and the income received and expenditure made from each restricted fund. In the case of transfer between funds, a separate caption in financial statement is used to show transfer between funds. So you can see in terms of fund accounting, so transfer between funds also should be clearly disclosed, okay, as a best practice. Any question? Okay, no need. Features of public sector accounting funds: the resources of government entity are not fungible and cannot be treated as one mass. Okay, so fungible here, some of the government resources not necessarily being transferred for any use. Specific restrictions are made on how money is paid to the government entity can be spent. Okay, multiple funds may also exist in one public sector organization. Okay, later we'll see, for instance, that our university have multiple funds. Okay, application of fund accounting: public sector as a government entity does not have pool of resources that can be used indiscriminately. Fund accounting enables PSO to prepare separate financial statement for different funds maintained as each fund has its own specific purpose. Okay, this is the best practice for the second. The problem is, will the organization provide separate financial statement? That can be an issue. Okay, so by right, if you are an accountant of this kind of organization, you should take the initiative to make sure every fund separate financial statement should be prepared and reported. Okay, then you can achieve that level of accountability. Otherwise, if there is no financial statement being reported, so how can you imagine how to assess the performance, how to assess the accountability of that fund? Okay, so where's the money? Because money is money, and particularly when the whole organization's the bank account is only one, so that can become an issue. Are you with me? In Malaysian government, later we'll see. There are several funds. Okay, under federal concentrated fund, that we'll discuss later. Because definitely in Malaysia, when it comes to reporting of the consolidated fund, they use in a way that is kind of fund accounting. Okay, reporting of funds at agencies. So in next class, we will discuss an example of fund accounting. Okay, right. Yeah, I think I just take this an example. If you look at this, right, this is our UIA. how to UIA, yeah. Okay, but of course these are 2009, so I think can be reported, shared with the student. And it's based on annual reports. You can see in UIA they we have different multiple funds, operating fund, development. So these two similar to government fund, okay. So there is based on operating, budget for operating and budget for development. And then we have endowment fund, okay, housing, this for staff, housing loan, vehicle, computer loan, research fund, okay, as well as scholarships for the staff. So as an example, multiple fund in the organization. Okay. I think here you can see, I think in 2009, 2008, of course, development fund, the balance is, these are balance. This one is a statement of a balance sheet, a statement of financial position. I think that this time still the name of a financial statement is a balance sheet. So you can see that the development fund balance is 2 billion plus. So UIA is very rich, isn't it? But this basically reflected by our campus, our Gombak campus development. So all the assets, I think in the corresponding entry is all the building, the PPE. Okay, the big part of it. Okay. Any question? Okay. Very good. Okay. Why you thinking? Oh boy. All right. Yes. Okay, now we move on to basis of accounting. Okay, I think as mentioned just now, we have cash, modified accrual, and full accrual. And I think Sister Sakina mentioned on the recognition. Okay, it is true. Okay, very good. Not many sound in my class. All right, now we move on. Recognition of transactions in the case of sales. Okay, when purchase order issued or sales order received, okay, that's a stage. And then another stage is good dispatch or good receive with invoice. Okay, so generally, I think when you talk about recognition in accrual, so that will be the point of recognition, isn't it? And then cash with the cash flow, cash received or paid. Okay, so then we'll see the basis of accounting. Okay, when for commitment accounting, they start to book in GL. Okay, when issuing purchase order. Okay, particularly government is basically, I think the focus is on purchase order, right? So they a lot of purchasing. It's on the non-profit organizations. Okay, revenue is not basically main targets. That is commitment accounting. When the goods and dispatch are received, that is accrual accounting. And when cash is paid or received, then there will be cash accounting. So when you say recognition, what does it mean, recognition, class? When the transaction is recognized, what does it mean? Yeah, I have to ask you because recognition is a technical word, but I don't know how you respond to this. Hey, where's the class? Where is my class? All right. Oh, yeah. Yes, to record. To record, okay. So basically to record in GL generally. Okay. So that's basically, take note of that. This is, I think, relevant to government. Commitment accounting, accrual, and cash. Right, now we move on to cash accounting as a reporting framework. Accounting techniques that recognize transaction and other event when cash is received or paid. Okay, the measurement focus of financial statement is balance of cash and its changes for the period. Okay, so basically you are reporting, it's like reporting cash book. Okay, in a way. Okay, recognize only cash inflow and outflow. Purchases only recognized when cash is paid. Okay, no creditors on the face of financial statement. Balance sheet item limited to cash, no assets or other liabilities. Sales are only recognized when cash is received. Final account reporting, cash-based transactions. Okay. So that will be recorded, all the captions in the financial statements. All right. But of course, is practice one of the options for public sector organizations or government to report using cash accounting environment or cash accounting. So under the best practice, under IFAC, so they require disclosure, okay, additional disclosure. If you cannot address through a financial statement, okay, you improve the reporting through disclosure. Okay, so you can see this statement of cash receipt and payments. Okay, definitely need to be prepared. Accounting policies and explanatory notes. Okay, detailed info on accounts shown on the face of it of financial statement. Okay, as usual. And you look at the additional info, okay, to make a bit more comprehensive. So receivable, payable, borrowing, and other liabilities, non-cash asset, and accruing expenses and revenue, commitment and contingent liabilities, KPIs, okay, should be reported as disclosure. Okay, so this is what is required. If the organization, if a government organization, they adopt and implement cash accounting, so that this will be the items for the disclosure. Okay, and of course, receivable and payables will not be in the financial statement, in the balance sheet, but they can be disclosed in the notes, including commitment and contingent liabilities. And on top of that, even requires KPI, okay, non-financial information, non-financial KPIs to be disclosed as well. Okay, so extraordinary items, okay, related parties, disclosure, major class of cash flow, asset liabilities, comparison with budgets, okay? So actual and budget can be provided, including consolidated financial statements. Okay, so that is cash accounting. Then we move to modified cash accounting. Okay, so modified cash, the difference is, if you look at this, accounting technique that recognize transactions and other events when cash is received or paid. The books are held open for about a specific period after the year end. So this basically practice in Malaysia. So our Malaysian, before we move full accrual, so we practice modified cash. So I think this year will be either this year or definitely this year or last year will be the last year, supposedly, to practice this modified cash accounting. Based on Financial Procedure Circular 1, government accounting policies stipulate that use of MCA, modified cash accounting, for the accounts of federal and state consolidated accounts. Okay, and clearly mentioned in the notes to the accounts. So why they call it modified cash? This is about this. Okay, the book for 2018, in this case, 2018 and 2019, okay, at the end of the fiscal period, 31st December, the cost incurred before the 31st December, but the payment made is after the year end. Okay, so because this cash accounting, by right, if the payment made after the year end, so the transactions is recorded after the year end. But here, because the cost incurred before the year end, then the payment is considered as if it is made before the year end. So you can see this modified cash is basically to make sure that for budgetary control, for parliamentary control of the budget. Okay, so to make sure that all budget be utilized. Okay, so the payment made. Yeah. So reporting include transactions taken place after the year ended within the extended period. Okay, in this case, for about 1 month. Cash flow at the beginning of the reporting period, which have already been accounted for in the previous reporting period, are deducted from the current period. And payment during the extended period are charged to the prior year budget. Okay, so payment during, I think this is the same time. Okay, payment, that's an example. Payment during the extended period are charged to the prior period. Then on works are performed, goods are received, and are rendered before the end of the financial year. Payment for the respective commitment has not been dispersed at the end of the financial year. Payment only made okay, during the extended period. But all these transactions be accounted in 2018. Okay, that's the idea. And it is allowed because of this modified cash accounting basis. If it is pure cash accounting basis, then of course this kind of entries will not be allowed. Huh? Okay, cash accounting and evaluation, benefit, record cash flow, facilitate link with taxations, facilitate parliamentary control, since parliamentary approval are granted on cash basis. Problem, provide no information about assets and liabilities, provide no information about creditors or debtors, may not separate capital from revenue, okay, capital expenditure and revenue expenditures. Huh? So capital expenditure will not be capitalized because there is no asset reported on the face of financial statements. Not necessarily comprehensive, little use to management other than cash control, may undermine efficiency drive. Okay, so very hard for the government organizations to develop full cost of information. Because basically based on cash basis. The accounting system is based on cash basis. Okay, accounting techniques that recognize transaction other event when cash flow involved can be reasonably estimated to be received in the near future. This one is for modified accrual. Sorry. For modified accrual. Okay, now we move to accrual accounting. But first, we go to modified accrual. I think to understand this, modified accrual is basically accrual accounting. Okay. The only difference is if you look at the second point, physical assets are not presented in the financial statements. Okay, only disclose future commitment requirements by recognizing financial asset and liabilities. Okay, so physical asset PPE, so you cannot expect that you will see PPE in the financial statements. Okay, but generally PPE is a big chunk. If you look at UIA just now, okay, so 2 billion. So if UIA use modified accrual accounting, so 2 billion will not be appear in the PPE, right? Will be just vanish in the air as expenses. And then accrual accounting, okay, as you understand what accrual accounting is. Okay, the benefits are record asset liabilities, debtors, clear separation of revenue and capital, facilitate managerial control, encourage development of value for money. Okay, because basically you are accounting for all resources used in organizations. Either it is a legacy cost, okay, additional budget, so all are accounted for. Okay, and increasing financial transparency in public sector. I think in a way that if you look at that in Malaysia, actually there was a trigger point why accrual accounting was initially mooted to be adopted in the government organizations. I think I still remember that time was in 2007 or something, during the time of Patla, when there was an issue of counterfeit checks, okay, in the government, and it was reported in the media, and then a lot of them. And then one of the ways that government respond to that is they quickly mention in the media that they will change the accounting system from cash basis to accrual basis. Okay, so if you can check in the internet, I think you can still find that piece of news. And then what happened? The government allocate 100 million, okay, 100 million ringgit to one of the big four firms, basically PwC. I'm not sure, do they just channel the whole 100 million to PwC or in stages? But in terms of budget allocations, so what 100 million was allocated? Okay, but PwC initially was mentioned to be contacted, to develop the system, right? So that was the first trigger point why when government wanted to basically migrate from cash to accrual, right? But nowadays, with the enforcement, I think with the needs of the government, with the previous government when they adopt outcome-based budgeting, so and then they further enhance the needs of value for money. The accrual accounting is one of the major regimes to make sure that they can demonstrate accountability. Okay. Challenges for accrual accounting require use of new accounting competencies, relatively new skill set for accountants in public sector who were trained in cash accounting system. I think that's quite true, isn't it? Because 50, 60 years, they are all in the cash accounting environment. The last time they really practice accounting is from their textbooks in the what do you call it? In the college. Okay, now when they move, if they have practical, if they join the industry first, of course, in the industry. But once they move as a government accountant for government, this is at the AG level, accountants general. But if they join to statutory bodies, they use accrual accounting, not an issue. right? But if they are, like say, all these big shots in the accountant general department, they may, 30, 40 years, so they need to be retrained for the accrual accounting. Requires considerable use of judgment. Okay, I think this is both. I think in cash accounting environment, so what needs to be disclosed, but more is for the accrual accounting. Okay, because there's so many judgments need to be made, valuation, measurement. Okay, for PPE, for various type of assets, for liabilities. So at the end, professional judgment need to be made. Okay, so that is really they have to have a good sense of what accounting is. Accounts and budget should be on the same basis. Okay, preference for cash basis for parliamentary control. Okay, still dominant. Require commitment from management for its usefulness. Okay, so government management also need to be aware of the capabilities of accrual accounting. That's one. And even the accountants, they have the professional duties, okay, to make sure that they will be able to develop the relevant performance measure, the relevant information, financial accounting information to manage the organizations well. Okay, a bit more comparison between cash and accrual. Income recognized when cash received, whereas in accrual when earned. Expenses and expenditures recognized when payment made, whereas in accrual when incurred. You know what earned and incurred, isn't it? Of course, I mean, when the word earned and incurred need to be, if you talk about income, revenue and all that, so of course we have to link that with the current practice of MFRS, if it is in practice. Or if it is now for government, definitely based on IFSAS. And assets not capitalized and classified as expenditures, okay, whereas under accrual will be capitalized and depreciated if needed. Liabilities, credit transactions not reported, but under accrual will be recognized in the accounting record. Okay, it's not only on memorandum. So in a way that cash accounting is single entry accounting, whereas accrual is double entry accounting. Okay, these are the international body, IFAC. Under IFAC, that is basically responsible to promote the best practice and as well as accounting standards. So International Public Sector Accounting Standard Board under IFAC. And then look at other practices, in other countries, how they deal with this financial reporting. In the UK, okay, they're responsible with Treasury, and then with the local government, right? And then definitely these are all the source of for them to develop the relevant statutes and also accounting standards. US, they have NCGA, okay, and then the Council of State Government, General Accounting Office, GAO, right, at federal government. And then for the accounting standard, they have GASB, Governmental Accounting Standard Board. GASB is basically for the government. For the private sector, they have FASB, okay, Federal Accounting Standard Board. Just like in Malaysia, we have MASB, Malaysian Accounting Standard Board. Okay, so following, but that is in the US. Okay, IFAC, Global Organizations for the Accountancy Profession, and was established in 1977. So many countries, members of the organization, including Malaysia, represent 2.5 million accountants, for the whole. So if you are a member of MIA, definitely directly you also have that benefit of IFAC. And then under IFAC, we have this IPSAS, IPSB, the National Public Sector Accounting Standard Board, okay, formerly known as Public Sector Committee. And there's another international organization, basically can provide framework for good reporting. It's International Organization of Supreme Audit Institutions, INTOSAI. I think this organization will cover again in auditing. Okay, ISB, the objective to develop high quality programs aimed at improving public sector financial management and accountability, including developing accounting standards and promoting their acceptance. Okay, so acceptance here means, of course, they develop accounting standards, but then the respective country must adopt, okay, for them to make sure that it become enforceable for all government agencies to adopt. Okay, so IPSAS adapt is basically is an offshoot of IPSAS is basically an offshoot of IFRS, but It's just that it need to be modified so that it becomes suitable for the public sector organizations. For instance, like for assets, to be recognized in government organization, in private sector, always asset is about future cash flow. Okay, so you need to translate revenue as well as asset can generate future cash flow. Whereas in government, not necessarily that all assets should generate cash flow, but they can have asset which can provide future service potentials. Okay, so there is a differences. Whereas service potential not clearly mentioned under IFRS. Okay, so we can have a look and you can download the guideline. Okay, let us see. Can you see this, the website? Yes or no?
Yes, sir.
Okay. Yes, these are the international projects. I think this is relevant for this class because we have international students. Okay, if your country yet to adopt accrual accounting, so this become the guidance. Your country can become member of SAS. Okay, so you can promote. I mean, of course, obviously, you may contribute. You never know. So these are the handbook. Okay, the handbook you can download, or maybe if they ask you to become to register, you register, and you can download. So this basically this handbook, where all the details are. So in Malaysia, so with this handbook, all the accounting standards. Yeah, you can download. There's a recent, even 2020 edition. So you can download and then have a look. So generally in Malaysia, even we have our accounting standard is MPSAS. So here is IPSAS. So our accounting standard, MPSAS, Malaysian Public Sector Accounting Standard. So that basically adoption from these standards. Okay. So word to word, except if there are needs of modifications, but generally, you know, I think the accountants general they try to maintain because Malaysia is part of an international community. So they whatever be prescribed by the international accounting standards, they try to follow word to word, except if there is need to change or maybe not change or add an addition as additional. Because in Malaysia, for instance, we have what do you call it? Even in MFRS, isn't it? We have these agriculture assets, biological assets. Okay, biological assets, for instance. Okay, maybe for other countries, biological assets not as important as in Malaysia. But in Malaysia, we have so many because there are some big companies, GLCs. Basically, their main products are biological assets. Okay, even for the government, there are certain entities, biological assets, a big chunk of that. So how to account? Okay, so it cannot be just simply become inventory. Okay, it may not. There is a possibility that there is also need to capitalize. Okay, as an other than as a fixed asset, for instance. So these issues need to be resolved. Okay, so to that extent, there can be deviation from the international standards, but they try, I think, to maintain because of it's not easy to be different from the main practice. Okay, got it? Question? Oh, okay. Yes, Crystal. Right. International accounting standards, exposure draft. I think these are process for the issuance of the standards. Okay. I think last time there was still under process. Okay. Now we move on to conceptual framework for financial reporting. The conceptual framework issued by IFSAS to apply to general purpose financial reporting under accrual basis accounting. The role of a conceptual framework, establish concept, underpin financial reporting by public sector organizations, provide guidance in dealing with financial reporting issues not dealt with IFSAS or recommended practice guideline. Okay, that's why I think on top of you learn word to word the accounting standards, you need also to understand conceptual framework. Okay, because sometimes for explanations, for guidance, because obviously if you ask the auditors, generally they say, oh yeah, we follow accounting standard word to word, so no deviation. But sometimes it's just that, okay, that's why there is a professional judgment, okay, that require higher than that. So But so that conceptual framework can provide that broad guidance. Provide guide on qualitative characteristics of information in financial statement, including relevant, faithful presentation, and understandability. An example. Huh? You come across this word, conceptual framework? Class?
Yes, sir.
Yes, sir.
I think you learned this in accounting theory, isn't it?
Yes, sir.
Ah, okay, good. So you understand. Then you apply this in public sector organizations. Hey, the end. All right. Any questions? Okay, if no questions, stop sharing. Okay, how's your assignments? Okay.